A payslip, generated with mathematical and mechanical precision, presents as a definitive record of fact. Yet this mathematically perfect page can seamlessly mask missing hours, an incorrect hourly rate, or stolen superannuation. This diagram exposes what a payslip actually is, an employer's declarative claim. It is not objective proof of reality. To verify its accuracy, you must decouple the numbers printed on the page and force them to collide against external ledgers, your own time records, your bank app, and your Superfund portal. The Federal Delivery Baseline gives you a strict timeline to begin this verification. Employers covered by Fair Work laws must issue this claim to you within 1 working day of paying your wages, whether they provide it as an electronic file or a hard copy. That 24-hour rule applies universally. It applies when you are on leave, and it applies even if your wages are handed to you in physical cash. The speed of delivery and the document format offer zero protection on their own. They mean nothing if you do not know how to systematically audit the specific financial claims printed on the page. A top-down audit begins with the macro data. Check 1 dictates that we verify the employer and employee identity. You must cross-reference the specific employer name and Australian business number printed at the top of the slip directly against your original employment contract and against the entity that is actually depositing funds into your bank account. A public-facing trading name often differs from a legal corporate entity, which is lawful. However, unexplained inconsistencies across your employment documents introduce immediate friction if you later need to recover unpaid wages. Move down to check 2, the pay date and the pay period. You need to map the printed temporal boundaries of the pay cycle against your personal time records and the exact date the nutty cleared the bank. Look for systematic omissions. A critical warning sign is a pay period date range that conveniently cuts off early, routinely omitting hours you worked at the extreme start or end of your roster cycle. Discrepancies in this header data represent a severe structural risk. If the identity and timeline variables are unstable, it obscures exactly which legal entity is responsible for your labor and when that labor occurred. Check 3 covers your ordinary hours and rate. You must contrast the hours claimed on the payslip against objective external evidence, like your own clock-in data, timesheets, or logs generated by the Fair Work Record My Hours app. The ordinary hourly rate printed next to those hours must be anchored to a binding legal instrument. This means a modern award, an enterprise agreement, or the national minimum wage. A verbal promise from a manager holds no weight if it falls below these statutory baselines. Employers frequently omit your specific award classification level from the document. You will often have to actively source this variable yourself to confirm you are being paid at the correct legal tier for your duties. Check 4 examines loadings, allowances, penalty rates, and overtime. Australian workplace law dictates that these financial elements must be separately identifiable amounts on your payslip. Look at this calendar grid detailing a casual worker schedule, a standard Wednesday shift, a weekend, and a public holiday. Here, the payslip collapses all 3 different legal entitlements into a single consolidated $32 flat rate. When we force that flat rate through an official algorithm like the Fair Work Pay and Conditions tool, it fractures. Penalty rates interact differently depending on your award. Some calculate the penalties strictly on the base rate. Others include the 25% casual loading inside the penalty calculation itself. You must decouple these consolidated numbers using official government calculators. Doing so exposes whether that single flat rate is actually absorbing and shortchanging your required legal multipliers. A flat hourly rate is only legally valid under strict conditions. Primarily, it must leave you at least as well off financially as you would be if every individual penalty, loading, and overtime rate in your baseline award were calculated line by line. A single clean number on a piece of paper should never be blindly accepted as proof that complex overtime and weekend penalties were accurately compensated. Mathematically simple flat rates often serve as architectural obfuscation tools. They streamline the payroll process for the employer while hiding structural underpayments that you can only expose by manually reverse engineering the math. Check 5 introduces gross pay. This printed figure must broadly match your own independent calculation of your verified hours multiplied by your legally required rates, including all penalties and allowances. Check 6 analyzes the transition from gross to net through deductions and PAYG withholding. Employers operate under strict parameters regarding what they can lawfully subtract from your pay. You must watch for immediate red flags: charges for arbitrary till shortages, deductions for customer walkouts, or paying for ordinary business losses. These are generally unlawful deductions, even if you signed a contract agreeing to them. You should also monitor your PAYG tax withholding over time via the Australian Taxation Office. An unusual spike or drop here often reveals a basic payroll error or an anomaly in your tax-free threshold selection. This vector scale visualizes check 7, the transition from theory to execution. You must compare the finalized net pay figure on the document directly with the settled transaction in your bank account. The execution stage has its own distinct warning signs. Look out for split payments with zero explanation, wages repeatedly arriving late, or scenarios where part of your pay is handed to you in physical cash, but entirely omitted from the official slip. A flawless, mathematically perfect calculation of gross and net pay is entirely useless to you if the physical money arriving in your bank account does not mirror the document. Check 8 is superannuation. The most critical distinction to understand here is that a payslip only shows an employer's intention to contribute to your retirement. It is not proof that the payment was actually made. This timeline plots the payday super rules, which generally require that superannuation contributions arrive at your fund within exactly 7 business days after your payday. Because the payslip only prints an intention, you must log into your external superannuation fund's transaction history to verify that the deposit actually cleared the vault. If the money is missing, you cross a jurisdictional boundary. Unpaid compulsory superannuation must be reported directly to the Australian Taxation Office, not the Fair Work Ombudsman. It is also worth noting a common limitation regarding leave. While annual and personal leave balances are highly useful to track, their absence on a standard payslip does not automatically constitute a breach of Fair Work rules. The superannuation line item remains the most dangerous field on the document. Without an external audit, it allows thousands of dollars to vanish quietly in the void between an employer's stated intention and your fund's actual reality. The reconciliation protocol begins by securing your data. Save the document, record the exact date you received it, build an independent log of the exact hours you worked, and lock in your correct award classification using the Fair Work Pay and Conditions tool. Next, execute the financial cross-checks. Calculate the gross pay yourself, scrutinize every deduction for legal validity, match the final net pay down to the cent in your bank ledger, and confirm the superannuation deposit with your fund. If you find a discrepancy, document the exact mathematical error. Raise the issue with your employer or payroll department in writing, request corrected records, and retain every piece of correspondence. The legal thresholds and rules framing this protocol are tied to a specific point in time, verified as of July 19, 2026, under the Australian Federal Workplace Relations System. This briefing provides general workplace information. It does not constitute specific legal, tax, or immigration advice, and does not calculate your final tax position. Crucially, visa holders and migrant workers are legally entitled to these exact same workplace protections. An employer cannot erase your minimum statutory rights simply because you hold a temporary visa. The receipt of a payslip begins an employee's continuous, independent audit. It provides the data required to protect your legally mandated rights.